Locking him at 10 pips here. Let's
She's
go.
a runner, she's a track star.
Hey, what's going on, guys? Hope you guys are having a great week. These are the best moments from the streams throughout the week. So from all the highlights from Monday to Friday will be clipped and put into this video. If you guys want to know more and you guys want to watch more, you guys can then tune to the streams every morning at 6:30 a.m. Eastern. All right, I'll catch you guys in the video. Peace. This is a 30-minute starter play chat, by the way. Let me just put it here for you. So yeah, for those that are confused. Right, so we understood that the 1 hour closed bearish at resistance. So originally I wanted sells after we closed bearish at this resistance, coming down to retest the lows. But since our stops were way too big, I decided to look out on 30-minute time frame to see that we had a 30-minute starter play, which is right here. So we understand that if price will break that low, then price will highly likely push down towards the support down here, at which we'll move stocks to break even at. I think regarding managing risk here, I believe as long as this 30-minute time frame closes below, I want to say like this support here, we should be goody for the next 30-minute count to drive down like this. But we have about like 5 minutes left in this 30-minute candle, so let's see what happens there. If we close above, I may consider managing risk, but let's see how we close here. I'll let you guys know what I'll do. Just because if we close above, we're still gonna be bearish. If we close bullish, however, that's when I'll look to close half. Okay, we have a minute and a half left, right? So if we close, I want to say bullish, I'll close my position, my positions in full. However, if we close, if you close bearish below or respecting the support, I will look to close half my positions, because then we'll be respecting the support. You really need a closure below here on the 30-minute candle for a nice push on the next 30-minute candle to drive down. Because if you don't get a 30-minute closure now, we're gonna have to wait for the 1 hour candle to close, and the 1 hour candle is gonna close in about 30 minutes, right? So the 1 hour must then close below 1807, because we're expecting that to close below before the hourly closes, obviously. So let's see. Oh, we have a minute left here. Price is obviously we're in a 4-pip drawdown here. Price has rejected, so let's see. I'm gonna close on positions here due to the fact that we close bullish right at that support. So respect that support. I'm gonna wait for the hourly candle to add a position, but in this case I'm closing here because we didn't close below support that I wanted here in a negative, like around like a 6-pip loss right in this trade here. So I'm looking for a position still. Overall, like the overall position still makes sense because we didn't break the 1 hour highs yet, but I'm just managing risk in this case, especially since I'm using the current candle stops and it wasn't the previous candle highs. The reason why I took a sell here on gold earlier was, I explained it, was because if you look at the hourly time frame, we had ranges to continue down. So we had a resistance right here and you have support right here. This is now a range. We took the onion play, basically what it was, basically just onion play. Because we understood that price was bearish at resistance, high chance for price to drive down to retest the lows. So we took a sell as price closed bearish at resistance to continue down. Obviously we managed risk with the fact that 30-minute candle never pushed down and respected that support, so then we closed, right? But this trade is nothing different from the trades that we've normally been taking. Like I get it, it is in the range, but the whole idea behind the trade is that we're at the top of the range due to the fact that we closed bearish and we're expecting price to come down to fill this range at minimum and then to continue down as it comes down to break the low at the same time. So that's why we had runners today come down towards the next support at like 1790, whatever, 98, wherever we had at this 15-minute candle here. So GJ here, like yes, you had a 1 hour candle that closed bearish at this resistance here. You had a high chance for price to drive down towards the support now. However, I wanted the what's it called, the 15-minute time frame to close back inside the range here. So if we get a closure in about 3 minutes here, I'm looking for sells coming down to fill the range, plus TPs will be down. Like overall, I'm expecting price to continue down here as this is a fake out here. So let's see what happens here. Perfect, we're in a position here. Got in a position here on GJ here. Got in a sell as we flip bearish after the 15-minute has flipped bearish, closing back into the range. TP stop loss is the previous kind of high, and TP is gonna be down here for around, I want to say 27 pips. So risking 17 pips for a TP of a nice 27 pips. At around like this support here, I want to say at the 10 pip mark, I'll look to close half my positions as this is a support. Plus we will get our 10 pips. And on the break of these lows here, I want to say that'll be when I will go risk free on this trade here. I think we'll be around, how many pips in profit? We'll be around 4. Nah. I'll say around the support here down here at 151.885. I'll move my stops to break even. Nice. Gonna move my stops to break even here, chat, as we're tapping that minor level of support. making this a risk-free trade here. Congratulations, we're risk-free now. We have 0 risk on the line here. So the next step to managing risk here is once you get to around this 10 pip mark down here, I'll look to close half. But as of right now, we're taking this minor support into consideration here, right? There's a minor support right here, and that's where we're moving our stops to break even, because we understand that at any given point we can still reject here to flip bullish and make a new high here for this current candle. So that's why I'm managing risk in this situation. Nothing emotional about it, more so has to do with technicals and what makes sense in this situation. Yeah, I'm gonna close half my positions here, chat, at around 9 pips here. Locking in at 10 pips here. Let's go.
A runner, she's a track star.
It's been a couple days here. Holy smokes. Lovely. Yeah, minor support here. You know what, chat? I'm gonna close full right here.
Exactly what
I'm gonna close full here for 18 pips here on this position here. Lovely. Perfect.
She's a runner, she's a track star.
Close full here. Tap this minor support here to the left. Got the 15-minute start play at the breaks. Dubs in the trade. Dubs in the chat, right? Guys, remember, there's a difference between, I know wins are wins, cool, but like there's a difference between good profits versus bad profits. There's a huge difference between this, okay? So, for example, like if you made money and the profits you made were you, one, over leveraging, or you over trading, or whatever it is that you did using bad habits, then that goes down to the category of bad profits, because people are going to think it's okay now to take those positions or to break those rules to make a certain amount in their account. And they're going to repeat the same steps over again. And long term, over trading, over leveraging is not going to work out. It's never going to work out. Never, because you're putting your account at such a high risk, and you're not always going to get a 100% winning trade, right? So doing that long term, how do you think that's going to play out, right? And then the good profits is when you take wins following and practicing the same trade and the same routines that you would always practice on a day-to-day basis. So not over leveraging, not over trading, sticking to your plan, not taking any impulse entries, right? Those would be considered good profits. And good profits for you are different from my good profits. Obviously, you may have a different strategy, different plan, but overall, you shouldn't be breaking any type of habits or rules to make profits, because you'll start to think it's okay to do so, and you repeat those same steps again. And long term, you're not going to get anywhere with that, right? So practice this. Practice good profits. What are your main setups, like the onion play and starter play? So, I mean, I guess I'll explain it now. I've been getting a lot of questions on this. I'll explain it briefly. So closure above the resistance. So let's say you have a range here, right? In this situation, above 152, or on gold here, say you get a closure above. That's one position you can take. The setup here is that you closed above the resistance, and now you're expecting price to continue up to fill the range, as we're closing above, doing what the counters to the left there couldn't do, which is close above the resistance. So you expect this to happen. So the setup is this. The entry type, however, could be two options. You enter on the break of the highs because you have a low wick to opening the candle, or two, if you get a decent wick on before you flip bullish, you can enter on the flip of the candle instead, because you're expecting price to flip bullish as it has no top wick on the opening of the candle. So the candle will open up like this. It will open up bearish, coming down like this, and then once it flips bearish or bullish, that's when you expect price to continue up, as long as it respects this low right here. So then the candle will end up looking like this. So that's setup number one. All right, setup number one. Entry number two would be we close above the range like this. Next candle decides to close bearish at the resistance. You then have a starter play. In this case, you place a buy stop right here due to the fact that this candle closed above the range. This bearish candle then closed bearish. However, it's still respecting the support here. So you place a buy stop right here on a break of the highs, and your stops would be the current candle lows, wherever that current candle low is in this situation, expecting price to continue up like so. That's
warm and fuzzy inside when I see this.
That's setup number one, entry number two. And then setup number two would be you close above the range like so, you continue up, say you missed the move or whatever, right? In other words, missed the move. You would then wait for the onion play. The onion play would be something like this. This is setup number two. The onion play would be price, then creating a resistance here, coming down to create a support here. At the support, you can now wait for a closure, a bullish candle closure, to confirm that you have found support. So once you get that closure like this, you now look for buys going up to retest the highs for price to continue up. This is setup number two. However, Setup number 2 can come with different entry types as well. So setup number 2 can now come with the starter play, or it can come with the
Fake out. No.
in this case, it just open up the candle. So like for example, like let's say we close like bullish at this support, right? You can just enter a buy here on the next candle opening. Once you create that top wick or a bottom wick, and then you flip bullish or break of the highs, and then you continue up. Or what you can wait for is you can wait for a starter play. Like that can happen as well. You can get like a bearish candle closure now, again respecting that support still, and then you can place buy stops here as prices still respecting the support to continue up. Buy stop would be there for 15-minute starter play or whatever starter play at the time for price to drive up to fill the top of the range. So that's an example of setup versus entries, and maybe like 2 of my setups perhaps, or if anything that's all of them, I believe. That might be all of them.
Also,
or fake out. Sorry. Yeah.
The fake out.
Let me explain that. Yeah, so let me explain that real quick. Fake out. So the fake out is we have this whole concept behind range 1, range 2 breakout. So let's say you get a breakout now to the downside. You get a closure below the range here. You expect price to continue down, right? That's what people would normally do. They'll place like buys above here, sells below here in the charts, whatever. The reason why I don't like doing that is because we avoid fake outs by avoiding the first range of breakout. So now let's say you close back inside the range now, like this. Close back inside the range. This now becomes a fake out because you had a resistance here and then you had a support here. This now becomes your range. You get a false breakout to the downside. You expect price to push down. However, price decides to come back into the range now. Therefore, breaking above this resistance, you will now look for buyers to continue up. You can enter on the opening of the candle, again on the flip of the candle after you create a bottom wick and you break the highs, or just on the flip of the candle. Number 2, you can get a 15-minute starter play. You can get a closure, a bearish channel closure respecting that support, and then you have your buy stops above that high, or a 15-minute starter play for price to continue up to fill the top of the range again. Right? So I hope that helped you guys there. This is some three basic scenarios there. How to be better in impulsive entries? You don't take impulsive entries. Simple as that. You don't take impulsive entries due to the fact that there are emotional entries. You want to stay out of all emotional entries and emotional thought processes when it comes to trading itself, right? Because if you enter with emotions, you will exit with emotions. If you take impulse entries, you will have emotions on the trade because you're now thinking to yourself, well, for instance, like, you know, let's say like right now you take an impulse entry for buys here because you see that price is pushing up. You're now thinking in your head, are we gonna close above or not? Because we have 10 minutes left and we can still close below this resistance. If you close below the resistance, then you may be doomed because prices are respecting that level. However, if you close above, then you should be goody. Why would you want to put yourself in a situation where you gotta think of it like that? And you can simply wait for a closure to take your buys going up. Are you putting in buys and sells for news? I feel like it's a bit of a lottery. No, I am not putting buys and sells for news. I never do. We always preach that we never do. We don't trade like that. We don't flip coins. We simply wait for the volume to sell down a little bit. So like 845, 9-ish to take our positions for news.